Hello and welcome back to another episode of Crypto. My God, shit is kind of in a clusterfuck right now. Let's get into it. So first and foremost, I've been chatting with some of the people that I know that had attended the White House meeting last Friday. Here you have the classic CoinTelegraph aesthetic of Trump and some coins. And in a nutshell, what I have garnered is that not much actually happened on Friday in terms of substantial, let's say, regulation, law, announcements, anything of that matter. To some degree, a lot of this has already been baked into the price. Now, what did happen was a largely symbolic gesture, right? Basically, an opportunity to both signal to the industry and to the public at large that these sort of players are now part of that White House inner circle. This was a very strong opportunity to bring everybody in the industry into a room together to say you now have a single point of contact between everyone that the US government finds to be of worth, of merit, and that this is the group that will be driving and pushing this stuff forward. So to some degree, it was a nothing burger in terms of substance. However, like I've been saying around regulation, around the real merit to what we can build over the next 4 years, a foundation was laid, a base layer. So we're not going to get any sort of alleviation to our markets in the near term, but I do think, again, this is foundational. This builds a trusted ecosystem. This builds a network upon which the crypto industry in the United States can begin to develop and grow. Maybe not the exciting outcome that we were all hoping for, because it did not indeed pump our coins. Let's look at Bitcoin right now, because it's kind of in the shitter, and I think everyone's rather disappointed. As we move out, we can see sort of our previous bull market and where it was at. Of course, we do have this dip over here back in February, right, which is around a similar drop. And that's coming off even higher highs. So maybe that does give us some solace to know that as we go earlier into February, where we have Bitcoin in the upper 90s, right? This was really the last time that we saw that 100,000 range. We were living high and large kind of going into this. I would say a lot of this was the expectations around what might unfold. Obviously, the hopes of a Bitcoin commission, a meeting at the White House, things of that nature, a strategic reserve. This was probably the pricing in which it all existed. Of course, we go back down to actually lower than we're at today, right? I talked about it, and it did this 78 touch point, and it came back up with some health, and now it's kind of correcting again. So we are testing this line twice, which is generally a healthy way to look at it. However, we do have to kind of take into account that things are not super healthy, just broadly speaking. Gold is doing okay, but FundStrat put out this chart really pricing things in time related to Trump's first term versus his second. We can see that the S&P down bad, right? The Russell 2000 down bad. Bitcoin's actually in a fairly flat slump over here, right? It's going down, but it's nothing in contrast to what we're seeing in the traditional markets, which were up and to the right in the previous term. Of course, we have the 10-year yield, the dollar index, and foreign elements proving to be a little healthy against the United States. So we have to look at this, right? The Bitcoin market is not doing great, but nothing is doing great. And that's the root cause. So don't try to extrapolate too far. I think if you believe in this technology, if there's an asset you like, this is that time when you might want to consider actually picking up a small bag, whether that be through dollar cost averaging, small purchases, week by week, or just saying I'm going to deploy into it now and I'm going to go for the ride. Now, do I think the pain is over? I don't. I think we're going to be in this for a while. It's going to take some time. We're seeing really aggressive actions coming from the administration on the macro. Again, tariffs, confusion. These are things that the market does not like. So as long as we have these kind of wild headlines and no one knows really how to make heads or tails of it, again, crypto, Bitcoin, they're risk-on assets. They're going to be the first thing that people run away from. However, we are beginning to loosen our view on regulation and all of that jazz. So it might be a good time to, hop into DefiLlama, go into that revenues and fees section and say, who's generating revenues, right? Jupiter Exchange, for example, has a 50% buyback going on right now, and everyone's dumping the token because they think the devs are getting paid too much. I mean, to my opinion, the thing's making money. You want to hire the best. It's competing with Web 2, and I think in that ecosystem, they're a little bit in shock as to what an actual Web 2 salary looks like on the upper echelon of the developers. So anyway, we are seeing a lot of opportunities. I don't want to dive too far into it, but of course, we have Bitcoin now even crossing, as I look at it, below the 80K realm, 79,983, and this is being defended. But we are in this dumb area of perpetuals, which is leverage, right? Perps are these crazy things that allow you to go long or short. Some coins like Bitcoin, Ethereum, maybe up to 100x. You should never be doing this. The 3 L's that destroy smart men: ladies, liquor, and leverage. So you never want to mess around too badly with those things. And I'm just looking at Perps volume across the board. 24 hours, we have $10 billion. Like, when we see this coin volume go down, you generally look at the Perps and everyone starts to lever up long. It's like, for fuck's sake, just buy the goddamn coin. But no, they want to gamble, right? And the problem with Perps is that they'll liquidate you. So if you put down $100 and you lever that 10x to 1,000, you have a band within which, if the price leaves it, you lose your entire $100. You get liquidated and you lose all your money. Now, this is really where the capital flows in crypto are going right now. Wild gamblers. And you can see in July of 2021, we have 0 Perps volume. This is why you got to see spot market pre-2021 go insane. There was none of this longing shorting madness that we have now. This, of course, continues to increase. We have the great bear market over here, and then we come in. Now, some of this is better perpetual volumes, markets that opened up. Binance, obviously, we have Hyperliquid now, which is doing a tremendous amount of volume. But look at this insanity on the right? We're doing, what are these, one day, $12 billion? I mean, this is nuts. These are people, again, putting on heavy leverage, trying to catch a knife, or to say, we're going to counterbet the market trends. Now, the trends are pretty much down right now. If you want to short with a little bit of leverage, I say go for it. But in general, avoid it. About 90% of leverage traders lose money. These are like hard statistics that you can discover. Now, as I scroll down, we can see the leading perpetuals markets, and it's actually pretty wild. I mean, Hyperliquid up here, Hyperliquid's fairly new. It only came out about a quarter ago, or beginning of the year to some degree. And I mean, we're seeing $51 billion of volume. Now, this is according to DefiLlama, so I think these are DEXs. And so you can see that when looking at 24-hour volume alone across some of the top, and these are DEXs, right? Binance is doing significantly more, but you've got 6 billion in 24-hour volume on Hyperliquid, almost 1 billion on Jupiter. I mean, these numbers are insane. Once we go into the 7-day volume, everybody's got to be. I mean, until we get down to below PancakeSwap, right? I don't even know Paradex. I don't even know MYX. I mean, there's like a lot of things in here that are pretty new to me. So this is where you're seeing a lot of the volatility come from. Unfortunately, people are moving from buying and holding these spot assets, right, actually purchasing the coins, to trying to trade them on the perpetuals market. This is much more akin to gambling. This has a lot of leverage, and of course, this creates violent volatility moves up and down. Now, why does that happen really quickly? Everyone's probably heard of a short squeeze. A long squeeze is the opposite. And basically, you have these perps that build up. Let's say we're doing a long squeeze right now. Since everyone's going long, you have an overabundance of risk in the long side. So if some sort of market maker, somebody with a large amount of capital, can sell the spot market down to start liquidations, well, you have one person gets liquidated, that cascades into the next, that cascades into the next, and that's where you see very massive candles in either direction. So this is all pretty wild. Now, of course, we're seeing with the new admin opening up some rules and opportunities inside the United States. Coinbase has come out just saying that they're launching their first 24/7 Bitcoin and Ethereum futures markets. Now, in other media, it's actually called this more of a perpetuals-like exchange. I don't know why you need 24/7. It always is. But we are seeing this Coinbase derivatives that is going to launch, and this is going to be very much like Perps. So we're only adding fuel to the fire in this regard, and that's kind of nuts. On the same time, we have seen Pump.Fun, the other mechanic for gambling, starting to really lose its fee generation mechanisms, right? We can see on the daily the volume is beginning to decline, as well as the total fees in Pump.Fun, right? This one's a little broader since we have March 2024 over here. Of course, we have the meme coin mania just providing these absolute ridiculous fee returns, and Pump.Fun ends up one cycle in with $589 million in total fees collected. Of course, they collect this in SOL, they convert it to dollars. This this is capital that is just being pulled out of the ecosystem. We are no longer recycling our capital. We are seeing that people have made very good value extraction machines, Pump.Fun being one of them. So this is where we are right now, everyone. I do hope to see some strength in the market. Obviously, we have a double test right here. But that being said, we need to see some broad health outside of the market. Bitcoin taking a little bit less of a beating than equities is somewhat positive in my opinion. Usually we are the tip of the spear in brutality, and they will abuse that spear. They will let it rust. They will break off all the tips. So for now, we're just going to have to ride this wave. If you're a long-term believer, it might be a good opportunity to start buying, maybe dollar cost averaging. I by no means think we're at the bottom. There's a lot of chaos ahead of us in the future. But as always, guys, good luck out there, and I will see you tomorrow.